So I built a net worth of over $2 million before I hit age 30, and right now I make roughly $20,000 per month on average with stock options in my trading account. But let's just say that we do a challenge. Let's say that I start over from zero, 100% from scratch. What would I do knowing what I know right now? How would I build a portfolio of $0 right now to as much money as possible, say 5 or 10 years down the road? So if you're starting from zero right now, maybe you're starting from $10,000 and $20,000, or even just lower than $1 million. This video I think is going to help you out a lot because I'm going to give you some of the lessons that I've learned along the way on my investment journey and just things in general that really move the needle, because a lot of people focus on things in life that don't really move the needle. I'm huge on things that actually move the needle. I mean, why would I not be? Why would I worry about the little minutia things that don't really matter? I worry about the big stuff that actually matters and makes my net worth go up. So we're going to talk about that in this video right here. This is my trading account right here, and I built this account up to over $800,000 all before the age of 30. My 2-year return on this account is $566,000. That is true profit. That is how much money I made on my money. That is not me sending a bunch of money to this trading account. Total money that I've sent to this trading account, it's probably about $100,000 in total. And that $100,000 that I sent most of that money in year 1 and year 2 on my investment journey. So in the last 3 years, I really haven't sent much money at all to this trading account. So I'm going to break this down to you guys in 6 steps. I strongly recommend you stay to watch all 6 steps because I went from $0 to over $2 million in 5 years. So if I had to start all over again, this is the order that I would do it in. So here we go. So step number 1, you need to increase your income. So what I mean by that is go to your day job, go to your boss, figure out how you could be more valuable in your company to make more money per hour and pick up as much overtime as you can. I know that's easier said than done, but literally, how can you make yourself more valuable? Can you get another certification? Can you get another license? I used to work in the medical field. I know that venipuncture people, they make at least $20 an hour, and you can learn that specialty in 1 day in 1 course. If you make less than $20 per hour, why are you not going to do that course, which you could do in 1 day, and you could instantly go out and get a job and make 20 bucks an hour? If you're making 10 bucks an hour right now, you could instantly double your income. That income from $10 an hour to $20 an hour, just think about it. Every day that you go to work, every hour that you go work at your day job, you are lighting $10 per hour on fire because you could be making $20 an hour, but you're only making 10 bucks an hour. So it's 100% crucial that once you increase your income, you do not go and increase your standard of living. I know so many people that say, oh, once I get this pay raise, I'm going to go get that new car. But the problem with that is you're not really making any more money at the end of the day. You don't have any more money at the end of the day that you're really putting in your pocket. Why? Because any dollar amount raise you get, you just go blow it on something else. You went from driving a $10,000 car to now you're driving around in a $40,000 car. And the $10,000 car versus the $40,000 car, they're essentially the same thing. They're going to get you from point A to point B. So if I had to start over, like I just said, I would increase my income, number 1, figure out how I can make the most amount of money as fast as possible. Now, what am I going to do with that money once I make it? I'm going to pile it into my investment account. Step 5 and 6 is going to talk to you about how I would invest that money to make the most amount of money as fast as possible. So step 2, it's going to seem obvious, but number 2, 100%, I would pay off all high interest rate debt, meaning credit card debt, auto loans, whatever debt has the highest interest rate, I will pay that off. Now, there's 2 ways of looking at paying off debt. You could pay off the highest interest rate debt first, which on paper that makes the most sense financially, but psychologically that doesn't help out most people because oftentimes the highest interest rate debt, maybe they have a bigger loan amount, but what helps with most people is you just pay off the smallest loan amount first because you feel like you're making progress. So maybe you have $50,000 in debt. If you go take out that one bill that's $1,000, you feel good, you could forget about it, it's off your list, and then you could roll into the next one and it's like the debt snowball that just eliminates all your debt. So for me, I like the debt snowball effect, and that's where you pay off the lowest dollar amount debt first, and then you roll into the next one and you slowly go bigger, 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 because you feel like you're making progress. Humans like to make progress, and if you go tackle a huge debt and it's going to take you years to pay it off, you're going to feel like you're not really getting anywhere. But if you tackle these little ones first, you're going to be able to check it off your list, and then bang, you move into the next one. So step 3, I would go educate myself. I would get my hands on every single book that Warren Buffett's read, Elon Musk read, Charlie Munger read, any famous investor. I want to read what they have read because those books have shaped how they think. Those books got them to billions of dollars. So why would I not consume the same information that they have consumed? Warren Buffett, who has a net worth over $2 billion, he's one of the best investors of all time. He said the number 1 investment you can make hands down, is in yourself. By you watching this YouTube video right now, you are investing in yourself. You are learning. You are trying to figure out how to increase your net worth, how to be a smarter, better investor going forward. If you want to learn how I made over $560,000 in the last 2 years, definitely check out my links in my bio. I have a free stock market blueprint that you guys can get. I have a course that comes out October of 2024. It's going to break down how I trade stocks, how I trade stock options, the psychology of money, taxes, banking. There's a ton of really good stuff in that course. I've done plenty of other courses. I feel like my course is one of the best ones out there, and it's going to be cheaper than most of the other courses out there too. So definitely check that stuff out. There's links in the video description for that. So after I feel like I increase my income as much as I can in the shortest amount of time, I'll pay off the debt. After I pay off the debt, I'm going to educate myself. I'm going to watch YouTube videos. I'm going to do courses. I'm going to read books. I have no problem paying for my education. You are bypassing so many mistakes that you would have made along the way if you tried to figure this stuff out yourself. I love learning from people that have actually done it, that actually have millions of dollars. So after this stuff is done right here, I'm going to open up a Schwab account. So Schwab is just a broker where you could go buy or sell stocks. So now that we've done all this stuff on the right-hand side, step 5, we're going to build the base of our portfolio. So where are we going to put this money? What stocks are we going to buy? What ETFs are we going to buy? How are we going to do it? How much money are we going to put into this stuff? So let's break it down right here. So if you just go on Google and you type in QQQ, that is a ticker for one of my favorite ETFs that I buy into. So this is what it's going to pop up right here. It's currently $486 per share. I would put 40% of my money in QQQ. This is another one of my favorite ones right here. It's VOO. This is the S&P 500 index fund. Current price right now is $525. So you can see right here, the base of the portfolio, 40% will be VOO, 40% will be into QQQ. QQQ is the NASDAQ, so that's more of the tech heavy companies. And VOO equates to the S&P 500, where that's 500 of the largest companies in America, and that's basically 80% of the entire economic output of America. So if you believe in America, if you believe America is going to be bigger, better, and stronger going into the future, VOO will probably make you a lot of money. And the average rate of return on VOO in the last 50 years was 10%. Now remember, if you make 10% per year, you will double your money roughly every 7.2 years. The return of QQQ or the NASDAQ in the last 50 years is similar to what VOO has done, so you would expect roughly 10% per year doing that stuff right there. So I'm going to show you a super quick example just to show you how much money you could really make when you invest like this. And don't forget, there's still 20% of our portfolio left. That'll be step 6 of 6. I'm going to show you that in just a second. But I want to show you an example really quick of how fast you could really make money. So if you go on Google and you type in compound interest calculator, just click this first one right here. I like this one the most. So now that we got our pay raise, let's say we have an extra $500 per month that we could invest. So our initial investment is going to be $500 and we're going to do $500 per month. Let's say you're just starting out right now. Let's say you're maybe 25 years old. So when you're 75 years old, which is 50 years from right now, let's just see how much money you would make. So we have 50 years for the length of time, estimated interest rate. So this is what I showed you right here. The VOO and QQQ do roughly 10% per year in the long run. Some years will be more, some years will be less, but when you average it out, it'll do roughly 10% per year, most likely going forward. So that's what we put in right here, 10%. We're gonna compound daily because the stock market compounds pretty much every single day, and then we hit calculate. So check out this number right here. You're probably going to be blown away, and this isn't even what we're going to do with stock options yet. If you just do this right here, you do $500 initial investment, so you open up your Schwab account right now, you put in $500. Then you put in $500 per month for the next 50 years, and you assume a 10% annual return per year. You will have $8.9 million. $8.9 million. That number's crazy. And keep in mind, this is $500 of today's dollars. And in 50 years from now, $500 is probably going to be what, like $25? It's going to have inflation. It's going to be way less valuable $500 then versus now. So contributing $500 per month is actually going to be way lower in the future versus right now because of inflation. So I put the $8.9 million right here, just showing you that if you do all the way up to step 5 of 6, you could have $8.9 million in 50 years from right now. All the stuff we did on the right side already: increase your income, pay off your high interest rate debt, educate yourself, open up your brokerage account. I like Schwab the best, and then build the base of your portfolio. This is the base of the portfolio that I actually like, and this is what the base of my portfolio actually is. So going down to step 6 of 6, this is where it gets really interesting. This is where you can make a lot of money. This is where you can lose a lot of money, because options, you have to understand them. You have to do them correctly. And going back to step 3, educate. You need to understand what you're doing. You have to educate yourself. Remember right here, I built this from $0 roughly 5 years ago up to $830,000. If you want to learn how I do this, check the link below for my course. It comes out October of 2024. I really think it's going to blow you away. It's going to change the way that you think about money forever. You're going to understand how to invest in stocks, how to invest in stock options, and actually understand with a plan of what to actually do when you're done with the course. Most courses just spoon feed you information. I'm going to literally show you exactly what I do and exactly how I did this. So if you want to get pre-launch pricing, it's definitely a big discount. Link below for that. So the bread and butter of my options trading, I'm either going to be buying calls or I'm going to be selling puts. So when you buy calls, you're essentially buying a contract that says, I want to buy Apple stock for this price anytime between now and a year from now. If the price of Apple goes up, I want to buy the shares because I could get them at a discount. If the price of Apple goes down, you're just not going to use the contract. When you sell puts, you're kind of like an insurance company, just like auto insurance. Typically speaking, with auto insurance, you just pay these monthly premiums all month long, and usually, hopefully, you don't crash your car a lot. And if you don't crash your car a lot, the insurance company is just going to take that money month over month over month, and they're probably going to have more money at the end of the day. Even if you do get in a car crash, all the premiums that they have collected, all the fees that they have collected in the meantime, the amount of money that they have to pay out in the event of a crash is probably going to be a lot lower than all the premiums that they have collected along the way, because they're in business to make money. They know, statistically speaking, what is the chance that you're going to get in a car crash and what is the typical payout going to be, and then they base your premiums on that. So the premiums are always set up so that they're going to make more money than they pay out. When I sell put options, that is essentially what we do. Now, you only want to do options trades when you have a margin of safety, when you have a buffer, when you really feel like the trade has a high likelihood of making money, because you could lose money doing this. And I explain this stuff step by step from A to Z in my course. Make sure you check out that link below. I know I'm pushing the course a lot, but it's really going to help you guys out a lot. So if I would start over, I would do these 6 things in order, and I don't see any reason why I couldn't hit $1 million net worth from 0 to 5 years from right now. I know a lot of you guys might think that's crazy, but this is what I would do. I work hard. I'm a hustler. I would work a lot of overtime. I would trim my expenses, and I would pile money into my brokerage account. Every dollar that I have, I would pile into the brokerage account. I would eat rice and beans, beans and rice, but in 5 years, I'd have $1 million. If I make a 10% return on that $1 million, which I do make a lot more than 10% per year, but look at it, if you make 10% on $1 million, I'm making $100,000 a year for doing nothing. That, my friend, is financial freedom for most people. So if you made it this far, like, subscribe. I'll see you guys later.